So can
right?
you walk us through your journey? What initially pulled you into crypto itself? Like what made you start really diving into it?
Well, so 2019 came along and I started hearing it. That I feel like that's when there was really a buzz going on about all the different altcoins popping up and what they could potentially do. And I started looking into things like VeChain and XRP because my belief was I was around during the internet era, but I was too young to really understand what exactly was happening. And to me, now I look at blockchain and that revolution very similarly to the internet revolution that we all had, as kids. Well, I'm 42, so I was graduating during the dot-com bubble pretty much. So I didn't have the opportunity to invest in any of that stuff, and I see a similar trajectory with blockchain. So I started looking at, okay, the most money on the internet was made with infrastructure. It wasn't the million web pages that popped up. It was the Rails. It was the infrastructure. It was the HTTPS. It was ACH. It was all these things that came from the internet, not all the individual apps or web pages or whatever you want to call them. So I was looking for institutional Rails because I thought that's where the money was going to be. And XRP is the banker's coin, right? It's the institutional coin. They have the largest infrastructure. And that's what I first got involved in because I saw they were getting plugged into the real infrastructure that's driving the value around the world. And as I continue to dig recently, I stumbled into the Canton Network and started going head first into that because I believe in the tokenomics and I believe in the use case and of course the adoption that they've had. And it looks like a lot of other people are starting to catch on to that adoption trend that's been going on over the last few months.
That's fantastic. I think, yeah, exactly. We see the same things, right? You
Right.
stumble upon it, you make these comparisons between what happened back in the day and if we would have known then or realized then what we know now. And we're not missing this opportunity, right? We see it. The writing is on the wall. We know the builders are out there. They're laying this new infrastructure down. It's all going to be interoperable with each other. I'm curious. So I know that from what I found out about you, you did have some health issues that kind of took you in a different path, and that ultimately led you to become a builder. You want to talk about that a little bit? Because I mean, you pretty much taught yourself a lot of stuff, which is pretty incredible, my friend.
So in 2022, I kind of got hit with a wall of things. 2022 was not a good year for me. Shortly after, we all just lost a ton of money in crypto in 2021 towards the end of that bull run, whatever you want to call it.
Yep.
But then in 2022, my mother passed away. And then 6 weeks later, I woke up and went to get out of bed, woke up to my alarm to go to work, went to get out of bed and fell. My entire left side was gone. I couldn't use it. I had multiple strokes in my sleep. And then now I got 95% of everything back. So I can walk, I can do all the things. I still golf, I still do the rowing machine. So 95% of everything came back. I'm very, very lucky in that regard. But I do have to deal with migraines, headaches, short-term memory loss, things like that make it impossible for me to work a normal job because I don't know.
Right.
I don't know when a migraine's going to come along and knock me out. Now I can't work the rest of the day. Bosses don't like it when you show up, work for 2 hours and leave. So I ended up having to go on long-term disability. And I don't like sitting still. I still feel like I have stuff to offer. I just need to be able to do it at my pace.
Sure.
So I started YouTube. And then when I found Canton Network, I did a stream today comparing Canton or CC to oil. And I think it's an excellent comparison because the bulk of the money to be made in, I believe, the crypto industry moving forward, even though we love to invest and make money as investors, I feel like the money that's going to be made is going to be done by the builders. Much like in the oil industry, the people who make the money are the people producing the oil.
Yeah.
Right.
Yeah, like the picks and the shovel for the gold rush, right? Like it wasn't so much the people getting finding the gold; it was all the picks and shovels that were sold during that time, and the economies that it built for all the people going there to try to find the gold and whatnot. So
exactly,
yeah, I did listen to your stream today. Yeah, I thought that was really interesting. So let's dive into to the Canton Network.
Sure.
For someone who's never heard about it, what exactly is the Canton Network in simple terms?
In simple terms, the Canton Network, I'll explain it how I think retail investors would like to hear it, I guess. I always try to put it in that lens. So the Canton Network in simple terms is a network or a blockchain that was created by digital asset. And so think Ripple and XRPL for those XRP holders. So digital assets, the company. Now, Canton Network, the thing that makes it different from most blockchains scale vertically, right? They keep adding things on top of it. Canton Network scales infinitely horizontally. So there can be an infinite amount of Canton Network blockchains. There can be an infinite amount of Canton Network global synchronizers. So therefore, there can be an infinite amount of TPS, right? Now, as we say, it expands vertically. If you look at it from a top-down lens, right, there's still one global synchronizer. There's still one Canton Network. It just and then comes back together depending on what it needs to do. That's the unique technology because they have so many validators, so many super validators. It all continuously flows and they can keep scaling it out infinitely based on the needs of the blockchain.
I'm trying to visualize it. And my first thought was like train tracks. And I was like, well, I don't think it's really train tracks because I can't really, but basically it's like a net, they're all connected to each other, right?
Think like a parallel universe, right? Like
yeah.
a wormhole, you know?
Yeah.
They're all the same, but they're all different.
Yep. I get it. And they all communicate so they can all communicate with each other. But yet they have their own little own area of privacy, even though that information is passing through. These guys don't need to know what these guys are doing, but it can all flow through each other.
Correct. Yeah. In a sense that's why you have the validators and the super validators to validate the transaction, and why you have the infinite amount of Canton networks. So that way, for instance, say me and Simon want to do a transaction, but he doesn't want you to see it. So he and I can spin up our own private subnet, do our transaction. The only people who are involved in the transaction are the ones who can see it. And then say you and I want to do another transaction. Well, me and Melissa can go spin up another private subnet and have our transaction that only she and I can see. So it's different from ZKP in the sense that ZKP, no one can see anything with zero knowledge proofs.
There you go.
Which doesn't work for institutions because they still need to be able to see the transaction, log it if they need to make changes. Again, both or all parties have to agree to the changes or it doesn't go through. That's the atomic settlement part of it.
Yes.
Either the whole thing settles or it doesn't settle at all, which sounds very trivial when you're talking about, two assets or two partners. But when you start getting into this stuff that's automated with 30 partners amongst 40 different assets, that composability or that atomic settlement becomes very, very important. And I'm supposed to be talking this very simply, and I feel like I'm getting very complicated now.
Well,
no, that's good. I mean, you're taking it from a two-person transaction. Okay, very, very simple. Okay, but really not applicable or doesn't really highlight the need for the atomic settlement, right? When you get into crowds, business deals, multiple companies, multiple deals, acquisitions, etc., far beyond the normal everyday probably discussion or workload of your average everyday Jane or Joe. That is very much needed. Even in here's a simple transaction that maybe would be related to what you're just talking about. The sale of a home. There are multiple, maybe five parties involved. but there's 5 plus 2 people per party. Okay, you're talking 10 people here, right? 10 different opinions of how something needs to go. I don't want it to do it like that because of this. I don't want this, blah, 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 blah. So I think that transaction is, most people could wrap their head around of like, oh yeah, having it's either we're all doing this or deal's done. We're not moving forward, right? Yeah,
exactly.
Yeah.
Let's see here. The Global Synchronizer Foundation was quite a mouthful. They call it Canton Foundation. Oh yeah, they do have the Canton Foundation now. Yeah, it was originally the Global Synchronizer Foundation. That's pretty funny though.
That's Uncle Ron for Uncle Ron from X.
Yes,
that's who put that comment.
Gotcha.
So I guess we just kind of talked about the configurable privacy model, in why it's a big deal for institutions, because they're not. It's a need to know basis. They have common kinds of information that they share, but they don't necessarily need to see each other's information. But because they're and I'm thinking out loud here, because they're kind of connected, that information can flow through to the party that needs to see it. Am I correct?
Kinda, in the sense it's if you're whenever you're spinning up a transaction, it's not a matter of if or anything like that. Only the people who are involved in the transaction see it. It's not put on a public ledger for everyone to see. That's not what the institutions won't work that way. Right. They're just not going to.
No.
So it's just a matter of spinning up a private subnet and doing the transaction, and then once you're done, you're done.
Yep. I like that. I really, really like that actually, because that upgrades so much efficiency wise. That upgrades the process of getting a deal done.
Right.
In any business, in any loads.
Yeah.
Right. Loads. That works great for loads. It's like, well, we need to do a deal. We need the information to flow freely. However, it's for eyes only. So here we go. Sub network, you and me. Boop, boop, boop. Here's this. Here's that. Here's this. Okay, cool. Subnet's gone, but it does show a transaction between parties. But the information on that transaction, more stuff that we would be able to see on other blockchains, very much not visible on the public blockchain. Right.
We are, with the exception of the people involved in the transaction that need their paperwork or need their paper trail or all those things. It reduces risk is what it does. It reduces risk for these institutions. Now, granted, public DeFi is great, but there's a lot of risk. And I think we've seen that this year. And that's, I never thought institutional finance was going to go the direction of, retail public DeFi because of that. But we're seeing it play out in real time now. I mean, JP Morgan and them are spinning up their own blockchain. That we've seen them discussing that in the first half. Are they going to use someone else's blockchain? I don't know. JPM Coin is launching natively on Canton this year. Just a thought.
Go ahead, Melissa. You go first.
Well, if you're gonna piggyback onto that, I'm gonna ask a separate question. So go ahead and piggyback what
I was a little bit. It's kind of a thing that I've noticed with corporations. They will snuggle up to the new thing. They will learn everything they can about it. And then eventually they will 100% do their own thing. They see the value. They're late to the table, but that's how they kind of operate anyways. They don't want to be the first ones to jump in. They would rather be the last one, learn everything about it after bugs are worked out, apply it to their situation, make good partnership, and then go, okay, well, we've seen everything about you. We're out. And then they go do their own. They're in the background. They're creating their own thing. A great example is back in the day, pre-2020, there was the app called DoorDash, just like Uber Eats. Well, DoorDash hooked up with Walmart. Walmart was like, yeah, deliver our groceries. Sweet. But now Walmart has their whole own network, whole app, whole payment system, the whole coup de grace. So I could see that. I could definitely see that happening. Hence why institutional is taking that air quotes risk of joining public DeFi because they're learning. They're really, really learning.
Well, I mean, you can look at it from the Canton Network point of view in the sense that they built their blockchain backwards. They kind of did that themselves, right? While everyone else was getting sued by the SEC and figuring it out, they're sitting there looking, okay, how can we build this? And they're talking to Goldman Sachs and they're talking to Microsoft and Moody's and JP Morgan and all of these financial institutions that back them, finding out exactly what their customers want, and they were building it behind the scenes and didn't actually release the blockchain until 2023, but they had been working on it since 2014.
Yep.
So what are some of these major institutions and partners that are already live on Canton?
Let's see, DRW TradeWeb, obviously at Broadridge with the repo is the biggest one, doing roughly $400 billion a day in repo. Which when you think about it, it's really only about 3% to 5% of U.S. market. So it's really not a lot in comparison.
For our dip-a-toers, can you just briefly say what repo means?
So repo is essentially a payday loan for major institutions. Think of it this way. At the end of the day, you have your assets, your cash, your debts, all those things. And major companies have to hold a certain amount of cash on their books. They have to by law. So they'll do an intraday repo, essentially like, okay, I need a loan for cash to keep on my books. I'll give you some of my treasuries as collateral or some of whatever they're putting up as collateral. And they're taking that short-term loan just to have the money on their books at the close of business. That's a repo transaction. And it happens, I believe, the average daily volume, I think, on that globally is 11 trillion. And daily volume. So that's what Broadridge is starting to do on their blockchain is it's about 3% of that United States repo.
Yep.
Yeah.
That's
and
really
Pay Me says DTCC on the way, July soft launch, October launch and shout out to Marvin Davis. Smash the button. Thank you, Marvin Davis.
What up, Pay Me? He's
Clay,
one of my subscribers.
Oh, yeah. Clay Howerton's peer-to-peer transaction would be great on there because we don't need the greedy banker seeing transactions. That's what Clay says.
There you go.
So I kind of want to move in a little bit to a lot of people got really excited about the Grayscale Canton ETF filing. Do you know about that a little bit? And if so, can you break it down about what does it actually mean for Canton Network?
Yeah. So it was just announced again, that's going to be more retail buy pressure. So for instance, like people in New York City still can't buy Canton coin. There's a lot of people in the United States that still can't buy Canton coin. So by a Grayscale ETF is going to open the market up to those people. And most people are, let me back up real quick. People like you, me, people watching, we are really like less than 1% of the population. No one is, in the grand scheme of things, no one is going out and buying these tokens. So what an ETF does is it puts it on everyone's radar. Now it's at every single, brokerage office or investor. They all now have access to this. It's going to open up a lot more retail buy pressure for CC, especially as people get wind of it. Now, there was some interesting information inside the paperwork that they released for that ETF. They revealed that 89% of all the CC tokens are held by 100 wallets. So that was giving a lot of people pause for concern with the Canton Network because of that distribution. But think of it this way. Canton noted that and said, yeah, we're going to do this anyway. If that tells you anything.
I don't have this in my list of questions, but I intended to ask about it. So can you talk, actually it is, any concerns around token supply concentration that people should know about. So my question really is the tokenomics. Simon and I briefly touched on it earlier. And when I was researching Canton Network, I saw some similarities to say like what we learned about the Zebek network. and their token and being used to pay for the Zebek network, and then having them be able to pay with it, and then having it get burned, and kind of creating that whole flywheel effect. And so when I was listening to some different stuff on Canton Network, I thought I heard him say something very similar to that. Can you talk about that a little bit, and why you think this is good tokenomics for that token?
Absolutely. So before we get to CC being burned, which you are correct, CC are burned in every single transaction that runs through the global synchronizer, but I'm going to give you the full context, because a lot of people talk about it and don't discuss the full context of the burn and mint schedule. So minting, they decided to release over the first 10 years, they're going to release 100 billion tokens. At the very beginning, they started out with 40 billion for the first year, and that was over 6 months. So essentially 20 billion in the first 6 months, and then they halved it, and then it went down to 20 billion for the next year, and then just in January, they halved it again to 10 billion. And then in 2029, they'll half it again, goes down to 5 billion. And then in 2034, once it releases the full 100 billion tokens, it gets halved again down to 2.5 billion, and that'll be their permanent inflation of 2.5%. So the mint schedule is constantly going down. And also speaking of the concentration, and we'll get to that part, at the very beginning, super validators were needed most and provided the most utility to the network to help actually build the blockchain, and they received the bulk of the rewards. So super validators received 80% of all the rewards to help build up the blockchain. After that first halving of coins, the super validators got halved too. And then they went down to 40% of the token supply goes to the super validators. And then in the most recent one, it was halved again. So now they're only getting 20%. So now the bulk of the rewards, 62%, actually goes to app developers. So they're rotating where the rewards go based on what's going to drive value to the network. And at the same time, those tokens are depreciating in the sense it went from, 20 billion a year to 10 billion a year, and then it'll be 5 billion and then 2.5 billion. So now that's the mint schedule. Now everyone knows where the tokens are, who got them, and how they got them. How are they burning? Every single transaction that runs through the global synchronizer must burn Canton coin. There's no way around it. Now, the fees will be denominated in dollars. So say, for instance, we're doing a transaction for easy math that's $100. You have to burn $100 worth of Canton coin. That's how that transaction goes through. So as more transactions run through the global synchronizer, more Canton will be burned, pushing up the burn to mint equilibrium. But what the craziest thing about it is they're doing about $2 million to $3 million in fees right now. About 15 million CC per day are being burned. It's 8% of the supply so far has already been burned.
Wow.
8% of the supply that's been released to this point. So of the about 40 billion tokens, I think, that have been released, 8% have been burned. So no one's burning as fast as them. But here's the crazy thing. We talked about the private subnets, right? None of them burn CC. This is all happening only through the main global synchronizer. So the Broadridge repo that we talked about, the HSBC pilot you hear about, the Japanese bond pilot you hear about, all of these things, none of them burn CC yet. It's coming. Okay. They have already announced that they are working on a new CIP. They're working through it. Yuval Ruse has confirmed it himself multiple times. He said we'll be seeing a CIP coming soon discussing it.
I'm so glad that this show is recorded, because my mind is going I'm like listening to everything. And so, I mean, this is the coolest thing. Like, even with XRP and figuring out the way that they've done it, figuring out the way, learning about the way Bitcoin did its tokenomics. And then even my friends that are building things on the ledger, they're kind of creating their own tokenomics. And, you start to really get in touch with the overall concept at the end of the day, what the goal is. How do you build a decentralized system where there's not just one owner in something? You get people to put in the work. So like the proof of work concept, you've got your nodes and they're building that like base layer and they got rewarded from it. But it's like, hey guys, it ain't going to stay that way. You're not going to always be getting these tokens. You're helping build the foundation. Now we're going to shift and we're going to start paying the people that are going to be building the apps, which we're going to talk about you because you're a very important piece of this puzzle also. So yeah, I and then then the concept that they have to use the Canton coin within this. So they're gonna pay with them, and like I'm just trying to still figure out how the cycle goes. I can see when you're decreasing the supply and as the minting of them go smaller and smaller and smaller, and you're decreasing the supply at the same time, it's going to increase the scarcity, which is then going to increase the value of said coin. Right.
Econ 101.
Right. So, yeah, I mean, this is interesting, and I would love to see it like all written out so my mind can. But continue on with just what you were talking about, the tokenomics, and then I do want to get into your building because you've built an app on the retail side of things where you're kind of coming in. So I want to have time to be able to talk to you about that. But
yeah, so on the tokenomics, there is a key part that a lot of people don't talk about when they're talking about the bull side of things, and that is the other side of the burn-to-mint equilibrium. Once you go above a 1.0, say token price rises to a great number, right? Say CC becomes $5 a token. You're still only paying $100 in fees for the same transaction. So now you need less tokens. So the utility is going to have to continue to increase. Otherwise, that burn to mint is going to be pushed down. That's why I think the oil analogy is very, very good that we talked about earlier, because if the need for oil isn't there, the need's going to go down, and then they'll reduce supply in order to push it up. So it very, very much works similarly to oil or a stock or another kind of usable commodity, because essentially it is the fuel that makes the Canton Network go. Yep. So there is an equilibrium point that the price will get to based on the utility where it won't go higher. And as retail investors, I try to make people aware about that. And when you're looking at the 89% concentration, just, don't worry, super validators have to lock up 70% of their freshly minted tokens anyway. So the float's not as high as people think it is out there.
Well, and here's the thing. It just in my simple mind, and I could be wrong, but what I'm hearing and I'm seeing, given how you explained what it does,
right?
You have these players that they've decided we are going to be working together. We're building something. We're on all share in this. We might not even be friends. We might be competitors, but we're all building this. We all got a little piece of this pie. We all want our privacy, but we need to be interoperable with one another. And so everybody is, they're doing their work. They're getting their stake in the game and whatnot. And in hopes that at the end of the day, it's just going to be this continuous loop where, and it's still going to be the dollar is still going to probably be what it's denominated in. But as the price of Canton coin goes up, it's still going to be the same kind of prices for whatever it is that you're doing. And so you'll need less of those coins, yada, yada, yada. Right. So and which is a very powerful a powerful thing, because generally you have companies that are often these silos and they just want to control everything. They don't, kind of like Apple didn't want to communicate with with Android back in the day, or Windows didn't want to, they didn't want it to be interoperable because they wanted to be off, the side.
Right.
But they finally realized, you know what, I gotta let you text your friend that has or communicate with a different kind of computer or whatever,
Right.
So
I think if blockchains aren't working to be interoperable, then they're not solving the problem blockchain was made to solve. There should be less fragmentation. There should be less silos. More fragmentation and silos just create more risk. So I think, look at the hacks. They've all been bridges recently. So we have to be able to work together. It's not going to work for institutional finance that way. It's just too much risk. And when we're talking about quadrillions of dollars of value with the DTCC, this is a matter of national security. It's not going to be on a random DeFi protocol. It's just not.
No, I feel you. So before we get to your retail access, real quick, how do you see Canton working alongside other chains and tokens? For example, do you see any synergy or potential integration with projects like Zebek or say XRP for cross-chain utility?
I absolutely do. I always, on my channel for the longest time, when I was talking about both projects, Canton and XRP, I thought they worked well together. Whereas Canton provided the back-end settlement for the institutions and Ripple provided liquidity after. I still think they can fill that role, but it looks like that's what XLM's also been selected to do by the DTCC. Again, XRP's on that patent also. I know that. I do hold a bag of XRP as well. Yeah. So we have to deal with that. I lost my train of thought. Let me get back because I was talking about the DTCC. Where do I see Canton going with interoperability, right? Yeah. So I see them working with Ripple as far as liquidity purposes, XLM as far as liquidity purposes. Quant is highly involved with a lot of the same players I've seen. It's going to have to be an interoperable world. There's no world where only one token wins. Personally, again, CC is a gas token on a back-end settlement institutional layer. It's not there to be money or compete with XRP or Zebek. Now, as far as ties to Zebek, that's where I was going. There already is a connection. If you look at Lattice, Zebek actually partnered with Lattice well before XRP Vegas to do the first neobank on Canton. So Zebek's already been involved with Canton for about 6 months. I know there's some more stuff coming with neobanks in the near future. I would assume Zebek is going to be involved with that as well. Chainlink is a validator on Canton Network. And then if you're talking about growing out and you're talking about institutions, look at where they plant their flag. Look at where they're building. Follow the money. Visa became a super validator on the Canton Network. Circle became a super validator on the Canton Network. Chainlink and Layer Zero are fighting on who's going to be the next one. So, if that doesn't tell you anything, I don't know.
Well, and here's the thing. There's nothing to say that they can't dip their toe in many different areas, right? If you have the capability of becoming a validator on a network that's being built, that's potentially going to solve a real world use case problem, why wouldn't you do it?
Right.
You know what I'm saying? So like a lot of times, you hear all this different kind of news out. It doesn't necessarily mean, it could mean everything and it could mean nothing all at the same time. But of course, normally we're not paying attention to this kind of stuff. We don't give this kind of stuff attention. Normally, the average person is not going to say, I think I should look into Canton Network today. Right. They might hear somebody talk about it briefly and just be like, I don't even know. I'm the kind of person that when Uncle Ron said Canton Network, I've been doing a little bit of work with Canton Network. I was like, Canton Network, wrote it down. I've heard that before. And you'll start looking into it, but a lot of people don't. Even this is not even on their radar. So this being an incredible opportunity for someone who's looking for something that could possibly be a future mainstay of how we operate. how companies and banks and that sort of thing, institutions operate and move this money around. So it's worth looking into. We've got about, I want to say like 18 minutes left. Is there anything you want to talk about left on this particular topic? Because I really want the audience to know about your retail access to Canton Network and what you've built. It's incredible. Your website is beautiful. So I definitely want to spend some time talking about that.
Well, we can segue into it. How about that?
All right.
Another one of the biggest misconceptions with the Canton Network is that it's not for retail. Because number one, most retail don't even know about it, and majority of retail don't want to get involved in DeFi. I would say 95% of crypto holders, their crypto never leaves the exchange. And one of the things I'm trying to do is make it easy, safe, and educated for people to do that, especially with the Canton Network, because there are healthy DeFi options out there for you. For instance, I'm earning 8% yield on my Canton coin because I'm involved in DeFi. So, and to me, it's with a safe place. But again, everything comes with risk, not financial advice to anyone. But the idea is to get people into a situation where they can learn about these things and these tools safely, because as we move forward with tokenization, because real world asset tokenization is all coming, we can all agree with that. We're not putting that toothpaste back in the tube. So with tokenization is going to come the ability to DeFi everything. And when I say the ability to DeFi everything, if you want to go buy tokenized stocks, tokenized Tesla, tokenized Apple, whatever, and then put that into a lending pool and earn yield on it, or say you tokenize your car and use that collateral and put it into a lending pool, like what's going to be available to do and how to participate and actually earn money with your assets like the rich people do is what's coming on chain with tokenization. And liquidity begets more liquidity. So as Canton continues ramping up with all these institutional items, tokenized treasuries, tokenized bonds, it's going to bring more and more value to the blockchain, and therefore more options for retail users to get things with their tokenized stocks and things like that.